Welcome to 3 at 3. Jon Najarian here. 3 at 3 is brought to you by Market Rebellion. So remember that marketrebellion.com is where all of these trades first appear. So if you're one of the people who occasionally pings me on Twitter and says, "Hey, Jon, why don't you give it to us before 3 at 3? I do. I give them to all of our subscribers to Inside or to Market Rebellion Elite. But if you're not a subscriber, you get them here. Still a good deal, because watch what happens to some of these stocks. I mean, when we talk about unusual activity, folks, we're talking about calls that are bought aggressively on the offer. That usually precedes a big rally. Puts that are bought aggressively on the offer usually means we're going to see a sell-off. With the puts, because I think that example is pretty interesting. There you see it from last week, Thursday, a week ago today. IWM 197.72. They were buying puts, and these puts, even though this particular put expired February 6th, rather, these puts continued to work, and now the stock down at 190. That's an ETF, of course, but the ETF or the equity down at 190 means that we've seen a pretty decent decline. And if you're somebody like me who trades a lot, this is a pretty good trade. It's a put trade. Puts blow up to the downside, folks. Bang. Look at how deep in the money those are today. Unusual option trading camp. I may be able to join this one next week. If not, it'll be Ryan Mastro and our guys talking about unusual option trading camp. It's a free webinar. You can join as well. It costs you $0, just your time. And we will send you a copy of it as well. Just go to marketrebellion.com/register. That's marketrebellion.com/register to participate. All right, let's get started with today's first one, MANU. So MANU, pardon me, 12,400 of the April 20 puts. So this is a downside bet. That's why it says bearish combo. A downside bet. They financed these puts by selling calls. So they sold calls, bought puts. That is a definite negative trade. It's not a straddle. It's not a banking function like a reversal or a conversion, because look, they bought the April 20 puts with the stock at 25. So the stock's here, they bought puts that are underneath. They sold upside calls above 25, all the way up to the 29 strike against the puts that they're buying. 12,000, that's 1.2 million share equivalent. Big trade. As you know, I like to follow big trades. And this one certainly seems like somebody thinks they have tomorrow's newspaper today, because they're financing this bet with upside calls. Bang. Encourage you to check out marketrebellion.com/get started for more, because we have lots of coaches, mentors, as well as subscriptions on that website, marketrebellion.com/get started. So you're somebody who's been trading and you think, you know what, I'd really like to take my trading to the next level. I'd like to trade like John and Pete. I'd like to feel confident in my trades rather than scared every time I buy an option. We can help you. Our coaches can help you. Our mentors can help you. The distance learning can help you. Check it out, folks, marketrebellion.com/get started. All right, here is our next trade, which is STM. STM, February 48 puts. So these are two puts in a row, folks. Puts and puts. STM, they're buying the February 48 puts with stock 49.5. As you can easily surmise on your own, that's $1.50 out of the money, underneath where the market is trading. Market's here. This is where the puts are. So that's a bet that we go lower between now and next Friday, because these aren't the 10th expiring puts. These are the 17th, next week. So if you're somebody that wants to participate, you buy, for instance, the 49 puts, and you sell if we start going down the 47 puts against it. that creates a 1-to-1 put spread that could go to $2. If it's 47 or lower, you own the 49, you own the right to sell it at 49. As we drop, you sell 47s, for instance, that creates that $2 put spread. So if you paid 50 cents for something that could go to $2, get the idea. That could work out pretty nice. That's what you're looking at in this situation. Rebels Edge Live, I just finished it with Pete a little bit ago. Rebels Edge Live, 4 days a week, Monday, Tuesday, Wednesday, Thursday, 4 days a week. Join us, 1 p.m. Eastern Time. We love talking with you. We love the input from you. So tweet us. Let us know what you'd like us to cover. We cover 4 stocks every day. We do the macro minute as well as sports, and then 2 bits of unusual activity. Bang, 1 o'clock, 4 days a week. That's 1 o'clock Eastern, by the way. Third and final trade is Google, and this is to the call side, to the upside, infinity and beyond. They're buying calls, July 120s. So for those of you who also want a longer dated option, this is your baby, because here we are, basically just getting through the second week in February. And these are not February, not March, not April, not May, not June, July, 5 months into the future. So 22,000 is 2.2 million share equivalent, folks. That's a big trade. They bought the July 120s for $2. That means $200, since every option is for 100 shares of stock. $200 times 22,000. You think that's a big trade? I do. That's why I'm in the trade too. Bang. All right. Thank you for joining us, folks. That last one, a call spread, first 2, or a call trade. The first 2 were puts. So first 2 bearish. I ended up with Google on the bullish side and all the way up at the 120 strike. Am I buying that? No, I'm buying the at the monies, the 95s, and selling upside as we rally. That will be my hedge. Not a lot of time decay in this one to worry about. Bang. Make sure you join the Rebellion by going to marketrebellion.com/get started. That is the splash page that you will see. You just put in your first name, last name, email address. Bang. You're a member of the Rebellion. I hope you enjoyed today's show. I will see you tomorrow at 3 o'clock Eastern. And of course, the 60-second workout video coming your way right early in the morning. Bang. Enjoy the day, folks. I'll see you tomorrow.